Upstream, are you with me? Under rainbow, curtain in the city, ocean, ruby, downpour. Upstream, are you with me? Feeling downpour. Upstream, are you with me?
Hi, I'm Michael Owen and I'm thrilled to join Weeks as their global brand ambassador. In football, success comes from precision, speed and strategy. Every move matters. With 1,000 plus trading pairs, you can trade spot, futures and more. And security? Weeks leads the way with Plus, a 1,000 Bitcoin protection fund. Join me on Weeks, where new wealth is made.
Hello, and welcome to another episode of 2025 Trading Congress. Today we have Daniel from the Chart Guys. How's it going, Daniel?
Real good. Thanks for having me.
All right, I can see you already sharing your screen. I want you to introduce yourself and maybe talk us through what the Chart Guys is. I know you've been one of the people that we have been working together for a while. I think it's the third edition of the Trading Congress that you have attended, and so yeah, tell us about the Chart Guys.
Yeah, so I've been a trader for 15 years at this point. I started in penny stocks, having no idea what I was doing, moved on to real stocks, got interested in crypto in 2017. And as a full-time trader, my interest is just going where the opportunity is. I don't really care what it is. And so that's what got me interested into cryptocurrency, and then obviously got headfirst into the space from 2017 onwards. We started the Chart Guys a decade ago, 2015,
Wow.
and it was just my partner and I wanting to share information. We could see that people were starting to get interested. It was definitely before the big boom of trading groups and things like that. But it was just a little small chat room where, hey, we'll share what we know and our experiences. And it snowballed from there in terms of, once we started doing cryptocurrency in 2017, that was definitely a catalyst where there weren't a ton of YouTube channels doing technical analysis on crypto at that point. You could probably count them on one hand. And so that definitely helped us get some attention, as a lot of people obviously gained interest in that as 2017 prices exploded. And here we are a decade later, still doing the same routines and navigating the ever-changing space in crypto, stocks, and trading in general.
Yeah, great. So why technical analysis? I mean, I guess when we start, TA is probably the part that makes the most sense, right? So there's always a random post on the internet that shows us a triangle, and then you see a triangle, like ascending triangle, and you see, all right, is that what people are really using for their trading? I can do that as well, right? So a lot of people start with the TA, but like when you give it enough time, you know that a lot can go wrong, right? So you said you started the Chart Guys a decade ago. So what kept you with the TA? That's I want to ask.
Yeah, so technical analysis is a tool, and you can use it right or wrong. If you try and hammer a screw, it's not going to go very well. But It's honestly watching the evolution of the acceptance of technical analysis has been great. Just because, again, when I started 2010 through 2013, we were still trying to get over the hurdle where everybody was talking smack about TA. Which like, this is useless, it's voodoo, it has no place in markets. And over the last 10, 12 years, it's gained a ton of acceptance as a bunch of the major traders that people look up to say, no, I use this as well. And people realizing, oh, okay, maybe there is some value here. But, just like everything, it's not black and white. It's not 100% technical analysis and zero fundamental. You got to mesh the two. Some people, will use 25% charts and 75% fundamentals. And I'm probably the opposite, 85% technical analysis and 15% fundamentals. So there's no right or wrong spot to be on that spectrum. But I do think that, utilizing, it's just information. It's just a way to depict information and to depict human emotion on the candlesticks and on the charts. And it helps you visualize things. Eventually you start to recognize patterns. And again, it's just a tool that can help you try and get better entries. Obviously, anybody that has tried to play this game knows that in addition to technical analysis, that's the easy part. That's the book learning. It's applying it in the real world. It's navigating your emotional and psychological demons that try and inhibit your ability to profit. And it's just a small facet of what is required to have success as a trader.
Interesting. So, Daniel, maybe if you want to list your top 3 or 5, it's your choice. Indicators or tools that you use when you're doing your technical analysis, what would those tools be? I mean, if you want to share a chart, maybe you can also do it, but up to you.
I'll start with just words here. So it's evolved over my trading career, and it's narrowed down where, I used to have the Bollinger Bands and all these moving averages, the 20, the 50, the 100, the 200 period. And then honestly, it was 2017 crypto, which had me scale back those things, because for me, it was just all about price action. And 2017 crypto was the most pure technical analysis I've ever seen in my life, just in terms of, it was pure human emotion. It was, at that point in time, we didn't have a ton of automated trading in the space. We didn't have a ton of market makers. It was the Wild West. And that made it, in my experience, very easy to apply. These days you get all kinds of fake outs, you get megaphone patterns, which are stopping everybody out. It's more tricky than it was back then. It was very straightforward, following classical principles. So for me, it's always price action is the most important. I say the only truth in markets is the current price. And so I'm using price levels to determine trends, higher lows and higher highs, or downtrends. And in addition to that, I'm using RSI. I love the RSI. I think people misuse it significantly. We could talk a bit about that more in just a moment. Volume. I like volume a lot. And that's really, honestly, if I had to narrow it to 3 things, it's price levels, RSI, and volume.
Yeah. So the first one, the SR levels, right? The support and resistance levels. You identify them like purely based on the candlesticks, right? Or you use like some kind of a tool for that?
Yeah, just the candlesticks, the pivots. If we're going up 5 candles in a row and then we pull back, that top is a pivot point of resistance that we need to be keeping an eye on. And again, trends are just identified, and also it's multiple time frame analysis, where understanding the relationship of how the 5-minute chart fits inside the hourly chart, how the hourly chart fits inside the daily chart, and how they relate to each other. That requires a lot of nuance that takes experience. And honestly, it's just a lot of flashing back and forth between the time frames. Okay, we just confirmed a 5-minute uptrend. Zoom out to the hourly. What does that look like on the hourly? And that's where you're getting your reps in terms of, I say that anybody that's going to be a successful trader has to go through an obsession phase where you're putting in an insane amount of hours. It's your favorite thing to do. You're doing it every day. You're excited to do it when you wake up. And if you're putting in thousands of hours, that's what you're doing. You're just watching the price action. You're getting familiar with how all these time frames relate to each other. And then again, you start to recognize some patterns where, okay, last time things were this extreme, we saw a capitulation bottom form, and I've seen this pattern before. And you start to recognize markets and emotions repeating themselves.
Yeah. I mean, time frame, I would say, like, is probably one of the most complicated concepts in technical analysis, because, like, in the end, you like mentioned volume, for example. Volume is just a very, like, very easy tool to understand. Basically, like, if you can probably teach me and everybody here in like 3 minutes, right, what volume is. Um, but when it comes to time frames, like, I myself found it very like complex to grasp how to use the time frames in my trading strategy. I mean, at the beginning, I was trying to just use 2 or 3 time frames, but then I find out that I mean, sometimes I just need to switch to more, or when I'm like trading, trying to like invest, or getting like position trades, I just need to stick to the higher time frame. So I cannot just pick 2 time frames and just trade with them the entire of my life. So um, can you maybe walk us through the time frames and how you use them? Maybe we can go into the technicals as well here.
Yeah, so as you mentioned, the timeframes I care about, generally speaking, monthly, weekly, daily, 4 hour, hourly, 15-minute, 5 minute. But there are nuances with that where, as you mentioned, if you're focused on swing trading or investing or longer term timeframes, you really should only be caring about the monthly, weekly, daily. If you're focusing on day trading, then you're focused on the daily, hourly, 15-minute, 5 minute. My general trading day, I'm more focused on stocks than crypto. If we zoom out, that's generally what it is. The bell rings. I'm watching. I've done my analysis on the daily, the hourly. I know where the backdrop is, and then for that period of volatility, or it could be if I'm trading crypto and the FOMC reaction comes out and there's high volatility. That's when I'm zoomed in to the 1, 2, 5 minute time frame, and eventually things start to settle down a little bit. And it's really for me just zooming out. I'm watching the first couple of minutes. I'm on the 1 minute, 2 minute time frame for the first 15 minutes. Then I go to the 5 minute for the first hour and a half of the day. Then I'm on the 15 minute. So it's really just walking back and zooming out as we go. And it's different when you're in the heat of the moment versus the market's closed. Obviously, crypto doesn't close, but it's not a high volatility time frame. That's when I start zoomed out, and then I zoom in from there. So, okay, what's this chart doing on the monthly chart? Are we in an uptrend or a downtrend? And I feel like context is so important. Context is the word of the year for me, just with everything teaching, trading, and technical analysis, where daily oversold in this context is completely different than daily oversold in this context. And context is really just trends. If I'm in a monthly uptrend, I care about daily oversold, looking for a bounce there. If we're in a monthly downtrend, I don't care about daily oversold. It doesn't mean much to me. So I find a lot of people that struggle with the time frames or struggle with certain indicators don't have the full picture put together as far as all the different pieces of the puzzles. They're looking at things, and that's part of the learning process. Is you're looking at things with a zoomed in focus, like, okay, I want to learn about RSI. I want to just focus on RSI, but it's RSI in addition to the trends on the different time frames. And it's once you put in a certain number of hours or years or however long it is, it's almost like an aha moment where it all starts to click. And I hear that feedback very often in my videos. I've been watching you for 6 months. I had no idea what you were talking about, and now it's starting to make sense. And that's really what it comes down to. It's just enough repetition. It's learning a new language. And just like learning a new language, you got to put in the time and the effort. You got to hear it. You got to speak it. And eventually it starts to click in your brain. And technical analysis and trading is the same. And time frames and switching between them is the same as well.
Mm-hmm. Yeah. I mean, I can relate to that. So, one thing that I can see, especially after you mentioned that TA has becoming very popular in the past decade, right? One I wouldn't want to say downside, but something that a lot of beginners are struggling with is that, like, every day it seems like that there's a new concept in technical analysis, right? I don't know, liquidity graph, or market structure, break of structure, change of character, fair value gap. I mean, things like this, which I know you are familiar with. So what do you think is the best, like, combination of tools and the skills that somebody needs in their like beginning years?
Yeah, that's a good point. We are at the age of information overload right now. And again, 15 years ago when I was learning, it was like, where's the information? I'm grasping for it.
Yeah.
It's not there. Now it's information overload. You can be talking with, professional traders on Twitter. That was a fantasy back 15 years ago. So definitely it's hard to not get overloaded with information. I think a mentor is essential, where you're following someone's style to a degree. It's like training wheels. You need some guidance. You need to build a framework. And then everybody that I've taught that's become successful, they start with my style, but then they add little things and they subtract little things along the way to create it and make it their own. And no two people are going to trade the same. They can have very similar styles, but they're going to do different things. And so, for example, volume profile, fair value gap, things like that is new to me over the last couple of years. And I have my system and what works for me, but I watch my friends who are full-time traders using this, and I'm saying, okay, like maybe I can incorporate a little bit of this into my style. And it's not really changing things. If it's a recipe, let's say we're making a meal, I'm just tweaking the ingredients a little bit. I'm not really making a whole new different meal. So someone who's starting out, I do think it is important to have someone that you are emulating to a certain degree. And then as you start to get comfortable, you take the training wheels off the bike and you start to add your own things to create your own style. But in that period initially where you are, you're a deer in the headlights, you have no idea what's going on or what you should be paying attention to, it's important to have that individual that's helping guide you.
Mm-hmm. Yeah. I mean, my style of trading, I mean, I guess, like, it can be sometimes complicated because, like I went into like TPO and volume profile and sometimes footprint charts and stuff like that. That's because I like it. I can understand why a lot of people do not like to use them. They are complicated, and maybe they can get boring very fast. But yeah, I can really relate to what you say. I mean, if you have a system that works for you, I mean, it's going to work for you, right? It doesn't matter if you're using 10 indicators only, like price action or whatever. But the confusion, as I can see, is getting bigger and bigger, and people just don't know what to do, where to start. It seems like that the easiest way currently is to maybe learn everything and then choose from that, which is, as you said, in this era, what did you mention?
Information overload.
Overload. Yeah. So what do you say? Like, do you think that people need really to try and error when they're trying to, like, create a system, or what is going to be your way if you were to start from that?
You definitely need trial and error, but also trial and error when you're starting out is hard because you're going to fail no matter what. I don't care what system you use, you're going to fail when you start. And that's another problem today, is the lack of realistic expectations. If you want to learn to be a full-time trader, that's an endeavor that's going to require 10,000 plus hours. You might as well say, I'm going to be a lawyer, and then go through those steps. Like, you got to go to school for however many years. It's not just something you're going to try and it's going to click. You're going to fail for years. You shouldn't expect to profit for a couple of years. It took me 7 years before things really took off for me. We just had a Chart Guys member on year 8 have things really take off for him. So people that come into it saying, oh, I'm going to try this for 6 months. It's like, no, you have to fail for 3 years before. If someone goes break even their first 2 years, that's a great start. You just got a free education of 2 years of mistakes to learn from, and you didn't lose money. That's a great start. And everybody has the expectations of wanting to make money when they first start, and it's just not realistic. So yes, you have to do trial and error, and you have to try these things out. But again, it's hard to know what's going to work or not, because nothing's going to work when you start. So again, for me, I was in the forums on Investors Hub, a website back then, and I had a guy who looked like he knew what he was doing, and he did more than most people. And so I was just copying him. I was literally just writing my analysis. What would he say if he were looking at this chart? And after I had that framework, I could then do my own thing. And so I really think that's important, because otherwise, again, if you're in your first year, you're going to try Elliott Wave and you're not going to make money. So you think it doesn't work. And you're going to try Ichi Clouds and you're not going to make money, and you think it doesn't work. And you're going to try My Style. You're not going to make money. You think it doesn't work. So it's really just the hardest part of trading is preserving your capital in the first couple of years and staying in the game to get over the hump of, that's like saying, again, back to the language example, you're trying to learn a new language, and what's the best style? Pictures and flashcards, talking to a native speaker, all these different things. Well, if you're in your first year of doing so, you're going to struggle with any of those. It's getting through the first year. And so, yeah, it takes a little bit of everything. There's no right or wrong answer. There's no right or wrong way to trade or use technical analysis. There's tons of professional traders that do it very differently. So again, I just really suggest finding someone that you can trust, that has, a provable track record, that you form a scaffolding of a style around, and then eventually you start to make it your own.
Yeah. I mean, so something that you mentioned, and I agree as well, is that a lot of people, when they start, think that they can just go in, maybe get a course, and then they start trading, right? I mean, that's basically the mindset. Because it looks simple, right? It looks easy. It's essentially like there's just a red button and a green button, right? So but people do not think that let's go become a lawyer in a year or like in 6 months. Why do you think that is? I think because they advertise this space to look easy, but it is not, right? Maybe you want to elaborate on that?
Yeah, I mean, society as a whole over the internet age has been moving towards, it's just convenience. Everything is towards convenience. You're getting your food delivered to your door by clicking some buttons. That's the way society is going. And so everybody wants everything easy. And, it's the same reason that people will be up at 11 p.m. watching infomercials, and they'll buy the thing that you put on your abs to give you little electrical shocks while you're watching TV to give you a six-pack. Like, you want the easy, quick results that aren't realistic and never will be. And so that's your first, I say you want to follow someone that is legitimate to base your style around. Look for green flags and red flags. The real people out there are the ones that are saying, this is extremely difficult. You're going to fail a ton. It's going to take a really long time. The scammers out there are going to say, I can teach you to make 30% a year in 6 months. Like, no, you can't. That's just anybody who does it knows that that's BS. The people who don't do it fall for it. And so it's just people wanting to get the easy way out and get rich quick. I mean, there's so many aspects of our lives where there's examples of that. And it's just not the way that it works, and it never will be.
Yeah, I agree. I agree. That was a very good example. The device that gives you electrical shock. Yeah. All right. So I wanna I think these are very useful information from you, Daniel. So I thank you for that. So let's go through the psychology and the mindset. So you're a profitable trader, and you've been doing this for a decade, right? So tell us about that part of the trading that no one talks about, the discipline, the routine, the rules, and the strategy. So, uh, what are the things that you think a profitable trader has and that others don't?
Yeah, trading has, again, there's different levels of commitment for trading. You can have a
Mm,
full-time job and you can be putting in, a few hours a week, and you can improve your investing and your long-term trading based on that level of commitment. If you want to be a full-time trader, or if you want to make this your life, it literally becomes your life. It's all encompassing. Trading is a lifestyle. It's not a hobby. It's not even a job. It is your lifestyle. It is completely encompassing everything. Where, what do I mean by that? Like, okay, I want to be more disciplined with my trades. I want to put a stop loss on every trade. I want to ensure that I don't, have I don't go on tilt and blow up my account. Okay, well, how do I want to get better at doing that? Well, I need to exhibit that characteristic, discipline, in my entire life. I have to eat well. I have to have a workout routine. I have to, have a sleep schedule. There are times where, I love going to live music shows. There are times where I have chosen to either go home early or not stay up till the 2 a.m. set or whatever, because I don't want to ruin my sleep cycle and throw off my trading week. There are sacrifices that you have to make in your life to form this lifestyle that is beneficial towards trading. Discipline is one of them. Emotional control is another one. If you're someone that flips out and gets angry in traffic and bangs your steering wheel and swears, you're not going to be a good trader. You have to control those emotions. You have to be able to zoom out and reflect upon what's going on in your head. This person just cut me off. I feel my face getting hot. That triggered me. I feel anger. And then choosing to not act on those emotions. That's exactly what we do with trading. I feel FOMO. I recognize I'm feeling FOMO, and then I don't act on it. The newer trader feels FOMO and acts on it because they're not taking the step back to reflect upon observing what's going on inside their brain and then acting from that standpoint. It's like you got to be the observer and not let the emotions run the show. And controlling those emotions, as we know, is so important because our brains are literally wired to make us bad at trading, in the sense that our brains are wired to make us sell during fear at the bottom. They're wired to make us to buy during euphoria at the top. And we literally have to rewire our brain and reteach it things, things like negativity bias, recency bias. These are psychological phenomenon that through evolution has been beneficial to humans. If I eat a mushroom and it makes me sick for a week, I don't want to ever eat that mushroom again. I need to remember that negative experience. If I eat a mushroom and it makes me feel great, I'm going to, I can remember that, but it's much easier to remember the negative event. And trading's the exact same way. And my example with stop losses, okay, a newer trader stops out right before the move goes in their direction. And they'll remember that for the rest of the year. They won't remember the stop loss that saved them another 30% drawdown. And so again, it's rewiring our brain, and it is, we have to emulate what we want to be in trading, and we have to do it in every aspect of our lives.
Yeah. So as a professional trader, Daniel, what do you suggest people who just started their trading journey and they're kind of struggling with these emotions? They cannot handle them just like you can, right? So what are the steps, and what did you do in order to overcome those emotions?
So you can't replicate experience. I mean, you've got to feel it. One of the first lesson number one for everybody that I teach is use a stop loss on every trade, and people still won't do it. And I used to get frustrated, like, why are you not listening to me? You're in some instances, you're paying me for my information and you're ignoring it. And I then realized, they have to learn it for themselves. They have to know what it feels like to wake up sick to their stomach because they had a fat loss the day before because they broke their rules. And once they feel that sickening feeling in their stomach enough, then it will solidify and say, okay, I don't ever want to feel this way again. I have to do these steps to ensure that I don't ever feel this way again. And that only comes through experience. And the name of the game is staying in the game. So ensure that you are going through these experiences, losing, learning the lessons with a small amount of capital. I lucked out where when I started with $3,000 from high school jobs, that I stumbled into a bull penny stock market. When I had no idea what I was doing, I made some money. If I had lost my $3,000 in my first year of trading, I wouldn't be a trader right now. I made a deal with myself. If this works, great. I won't get a 9-to-5 job. If this doesn't work, I'll get a 9-to-5 job like everybody else. And if that's why capital preservation is so key, because you have to see a certain amount of time, a certain amount of experiences to be able to then build off of that. It's like building a foundation. The foundation of a house is the most important thing. It takes a long time to build it and make it right. You have to do that step before anything beneficial will come from it. I was earning well below minimum wage with my trading returns for my first 5 or 6 years. And then I was earning way more than it in my next 7-9 years or whatever. And the vast majority of people, if I showed them my trading results in the first 6 years, they would say, I have no interest in doing that. That's a waste of time. I can make more money doing 500 other jobs. Yeah, you definitely could have. And again, it's that dedication and time input that most people aren't willing to do. 90% of people fail trading, whatever the statistic is that you want to pull up, it's because of that.
Yeah. So you mentioned that people do not use a stop loss because they just remember that one time that it just prevented them from making money. They do not remember that like 100 times that it saved them. And like that's a very good point. And I found that journaling for me did really help in order to fix that issue. So I can just see visually, and I can statistically think that, all right, this is something that is working for me, or this is something that is not. So I should keep it in my strategy, in my system, or maybe I should remove them. So maybe can you talk about journaling a little bit here?
Yeah, journaling is definitely important. Again, we have to learn from our mistakes, or we will continue to repeat them. And journaling is a tool to help pinpoint those mistakes and shine a spotlight on them and make you aware of them. So many of our mistakes are just a lack of self-awareness. Oh, I didn't even realize I was doing this thing. And then, if you go and look at, I'm recently reading the Market Wizards book. There's the books, Market Wizards, highlighting, a bunch of successful or famous traders. And the vast majority of them talk about the importance of journaling, the importance of learning from your mistakes. And it's just to see what's working and what's not only in trading styles and setups, but even down to, the things that we have today, the platforms that you can plug in your results. If I look and see I'm red on a Monday 85% of the time, I could even just say I'm not going to trade on Mondays and just wipe that out. And why am I red on Mondays? Maybe I have a slow start to the week after the weekend. Maybe something with my family is distracting me on Mondays, whatever it is. But these are little things that you otherwise wouldn't be aware of. I recently just had one where I look back at my last 5 years or whatever. It's like, I keep having poor spring performance compared to the rest of the year. And then, that makes sense. I love gardening. I love being outside, and spring is my favorite time of the year. So in April and May, I care way less about this screen. I care way more about my yard. And okay, that makes sense that my, results are worse then. So maybe I should trade with less capital, take less trades in that little window. And I wouldn't know that unless I was, reviewing my results. So, when you're journaling, however you do it, I used to just write, handwrite stuff down. I always like how writing stuff by hand seems to burn it in my memory a little bit more than just typing or reading. Yeah. And so, you want to just lay out the trade. What did you do? When did you enter? What was your stop loss? What was your sell target? That alone will tell you, was that a decent enough trade to have attempted? I'm seeing one of the questions in the chat is, what is your risk reward ratio? I always want my reward to be at least twice my risk. I want to be able to be a 50-50 trader. I win and lose half of my trades and still be profitable. And, I've seen successful traders that are 40-60. They lose more than they win, but they are successful traders because they cut their losers short and let their winners run. And so again, you're laying that out. If my entry is 10 and my stop is 9 and my target's 11, that's not a good trade. My risk is the same as my reward. The setup needs to have smaller risk than the potential reward to ensure that win rate isn't what dictates whether you're profitable or not.
Yep. So Daniel, the next thing that I want to talk about here is that I know for a fact that you are a multi-market trader, right? You mostly, as you said, trade the stocks, right? But you also trade crypto, right? So I want to know a little bit about your experiences, because not a lot of people do that or can do that, right? Like most people essentially realize that they need to stick with one market. Maybe it can be like FX indices, crypto, or stocks. So what are the differences? I think that's very interesting for our viewers and for me as well. What are the differences between these two markets that you mentioned, the stocks and crypto? Because I mean, from outside they look similar, right? A lot of people mention altcoins as like I don't know, like low cap altcoins as penny stocks, and like Bitcoin and Ethereum as like the bigger stocks and the companies. So what are the differences really?
So the reason that I'm bouncing around to all different markets is just keeping the doors open for opportunity, where, I don't want to be subject to one defined market. What if we're in a bear market for 3 years? I want to be able to go somewhere where there's a bull market and, trade there. So I think, I've encouraged stock traders to get interested in crypto and crypto traders to get interested in stocks, just because you want those doors open. But the difference between the markets, there's a number of them. Another thing to point out before I get to that is the one constant in markets is change, whether it's going from screaming on the stock pit floor to computers, the introduction of Twitter and social media and the impact, having CEOs and presidents tweeting and impacting markets. The game is constantly changing, and it's adapt or die. You have to adjust with things that are happening in the market. And so the difference between trading and crypto, or stocks and crypto, the biggest difference is the overnight close. Stocks close, futures will keep trading overnight, but individual stocks will close, and that opens up the possibility for gaps. You don't have that in crypto. Crypto's 24/7. That's a benefit in crypto, because if I'm long Tesla and there's bad news overnight, if I've got a $2 risk before I stop out, and that bad news happens and we open $10 lower, now my risk is 5 times larger than I was planning on this trade. So for me, that means sizing down. If I'm swing trading, it's always a smaller size than if I'm day trading, just because you're giving up some control. Another difference is with the US. So by
size, you mean the trade size, right?
Position size.
Position size, all right. And you maybe tell us like what the percentage is? Mine is 2% for the 2% risk per trade in account. I mean, what is yours?
It's changed very, very drastically. As my capital has increased, I have lowered my risk, just because my mindset is I don't want to give any of this back. I just want to keep adding a little bit on top of it. So, I mean, these days, if I have a 0.5% drawn out of my account, that's a big bad day. I'm just going for little base hits at this point. If I'm tacking on 0.2% a day, that's great. It used to be very different. When my account was smaller, it was more like 1-2%. So that has been a shift.
Yeah, interesting. Yeah, you wanted to continue. Please do.
Yep. So another big difference, specifically in the U.S., because in the U.S. I used to pay $8.95 to buy, $8.95 to sell. Then it was $5.95. Now it's free. It's a massive change. I used to be spending, thousands of dollars, tens of thousands of dollars just on trading fees, and now it's zero in the U.S. Massive change. Why did that happen? adapt. You have to adapt or die. Robinhood came along and said, hey, you can trade free on our platform. Every other legacy platform, Fidelity, Schwab, whoever else said, oh man, they are going to take all of our customers. We have to do the same thing or die, adapt or die. And so that was beneficial to the retail trader. And the difference in crypto is the fees suck. The fees are they're detrimental. I spent $600,000 in fees on Coinbase between 2017 and 20 or whatever it was. And I look back at that and think, okay, it was worth it to get the gains in that very volatile environment. But if I can choose, if I can trade of something that's moving 5% in the stock market or something that's moving 5% in crypto, it makes no sense to choose crypto because I'm going to be paying hundreds of dollars or thousands of dollars in fees. And when that's the case, you're automatically starting at a disadvantage. Even just a buy and a sell, you're already down, let's just say 0.3% or whatever. So you got to be right 0.3% just to get to break even. It's such a disadvantage for a retail trader to have that as your starting point. There used to be a time when you could not find crypto volatility anywhere else in the market. 2017, 2021 to a certain degree. The last 5 years, that's not the case. There's been just as much, if not more, volatility in the stock market as there has been in crypto. So more and more people are saying, why am I sitting here focusing on crypto, paying all these fees if it's not giving me anything that other markets can give me? And that's why I think a lot of professional traders have shifted away from crypto a bit recently. If I'm looking for a Bitcoin trade and the stock market's open, I'm choosing the ETF every single time. Again, the fees, it just doesn't make sense to do otherwise.
Yeah, I mean the fees. I mean, especially for I don't know if you do that. I don't think you do like a scalping on crypto, but it just does not makes any sense, because like one swing for a scalp on like 1 minute or 3 minutes time frame is like 0.7%, right? And then you just get the trade. You were right. The risk to reward is great. It's more than 2 and everything. And when you close the trade, sometimes you see that you even lost the trade, because like you pay the fee on the position size, right? And and that I think is a very big problem in crypto. I did really I was really enjoying scalping crypto, but in the past like 1 or 2 years, I haven't really opened a single trade.
You need enough volatility to justify it, and it just hasn't been there. If I do scalp trade stocks fairly often, and if I did that in crypto, the fees that I would be paying would be insane. I would probably be losing money as opposed to making money.
You're gonna lose. So I just stopped doing that. And I still think like swing trading, maybe keeping a position through a week in crypto, is still like the best style that you can find, but but you need to really put in the time. You need to monitor the charts. You need to scan over like all these altcoins and create watch lists and stuff like that, and you need to monitor the trade. But I still think that swing trading works in crypto. What do you think, Dan?
Yeah, definitely, and that's been my focus. I'm only taking a handful of trades in crypto a year these days. Back then, I would have hundreds of pages of, when I'm doing my taxes, hundreds of pages of transactions and trades. So it's nicer on the tax front. But Mad Max is asking, they still have trading fees in their country. Does swing trading make more sense than day trading? The answer is yes, especially when you're learning. You would want to have confidence in a track record, a proven track record to say, okay, I'm going to go, I have some cushion to work with. I'm going to try day trading. If you're trying to avoid fees or not get beat up by them, if you're learning and wanting to take things a little bit slower and not have to react on, a very fast time frame, I would definitely suggest swing trading. That's how I started. I didn't have enough money to day trade. In the US, you need $20,000. And for my first, couple of years, I didn't have that. So I do suggest swing trading as a starting point.
Yep. So another Brown Kit has a question as well. So what is the reason some people don't learn from their mistakes when they don't have a stop losses and get ruined over and over again?
So for some of the mistakes, they're subconscious where they're not glaring. Your example is glaring if you don't have a stop loss. Honestly, a lot of it is you have to look your ego in the mirror and say either I'm wrong or I don't know. People don't like being wrong. And people don't like admitting they don't know. I just did a crypto live stream and the theme of the video is I don't know what's going to happen and I don't need to know to be a profitable trader. And that's letting go of that aspect of your ego is essential to level up as a trader, because you realize after enough trades, no, I don't know if this is going to go up or down from here. I know it's more likely to go up than down, but I know that, 1 out of every 3 times it's going to go down and do the opposite thing of what I think is going to happen. And I have to protect against that. So I'd say most people really hesitate to look their ego in the mirror and say, I'm wrong, I don't know, or these things that maybe otherwise would make us feel inferior, when in reality, it's leveling up our ability to let go and our ability to self-reflect.
Yeah, I mean, fantastic answer, I would say. So Daniel, now that we talked about like all the different aspects of the market, we talked about TA, we talked about the indicators, psychology, journaling, the differences in the markets, and I think we covered like a lot of topics in the trading, in a trading journey. How would you put them together? That's what I want to what I want you to answer, and maybe conclude this show with that is going to be great. So how would you put them all together?
So they're all happening simultaneously in the sense that, you're watching price action, you're starting to learn how to identify trends, you're taking some trades with very small capital to ensure that you stay in the game for years to be able to get to a point where maybe you break through. You're journaling as you go and learning from your mistakes, and routine. Routine is extremely important as well. However, even if you can only put in an hour a weekend, whatever it is, develop a routine and stick with it, because so much of a professional trader's life is those routines, doing the same thing pre-market, getting ready for the open. But all of those things have to align with your lifestyle. And meld with it. I should say, be cohesive with it. And so it's just a ton of trial and error. And that's why you have to be using small position sizes, because it's going to be constantly doing things differently. I don't like that there's a lot of traders that won't trade the stock market open in the first 10 minutes because it's crazy and volatile. And they looked at their trading results and said, 64% of my losses are in the first 10 minutes. I'm going to skip the first 10 minutes and trade after that once I have some levels to go off of, once things calm down a little bit. So again, these are all things that you just have to learn along the way. And the takeaway has to be patience. You're going to fail 100 times. I lose a trade every single week for the last decade. Sometimes I'll lose a trade every single day for the week. You have to get extremely good at losing. And to do that, you have to completely let go of your ego, because failure, it's like baseball. If you get it hit 3 out of 10 times, you're really good at baseball. And so you got to get good at failing 7 out of 10 times. And it's the same thing in trading.
Yeah. Great answer, Daniel. Thank you very much for tuning in. Maybe if there is like anything that you want to say at the end of the show, now it's a good time. We're going to wrap up the show.
Yeah, these days, again, there's tons of free content out there. We've got a free intro to technical analysis course. I know certainly this is free right now, right? This mastery multi-day series here at the end of November every year with Burb. That's great content. It's important to not get overwhelmed. It's important to find somebody you resonate with. And then eventually maybe you ditch that person. I've followed people and then I could see, maybe they're not as honest as I thought. Maybe they're not as, their style isn't as beneficial. You've got to go around, find the person that you resonate with, emulate their style to a degree, trial and error, trade journal, do review, get out in nature and reflect, sit on a hill with nobody around and reflect on your goals, reflect on the steps that you're going to take to enact them, make your lists, write them down, cross them off. There's all these steps that we can take to increase the probabilities that we can make money in markets. It just requires a ton of time and effort and work. And if you love the game, it's not work, it's fun. And if that sounds like you, then stick with it, preserve your capital, and keep learning.
Yep. Thank you very much, Daniel, for joining in, and everybody else who is watching this show. Here is the Free Trading Congress 2025 with the Burp Nest. All the links to the chart guys, links to the Daniel X account is going to be in the description. And also we're going to have a Black Friday sale, which you can find the promo codes in the description below. So make sure you like the video and go to the description section, copy the Black Friday code, and you are going to get, I think, 40% discount on every package that we have. So thank you, Daniel, for tuning in.
Glad to be here. Thanks for having me.
Yep. Have a good day, everybody. Take care.